Welcome to Talking Carts, the Consumer Reports podcast that helps you shop smarter, save more, and feel good about every purchase. I'm Tanya Christian.
And I'm Brian Vines.
And this is Talking Carts. So at the beginning of 2025, the U.S. Department of the Treasury released what they called the most comprehensive data on homeowners insurance in history. And we could tell you the results are not good.
Average homeowners insurance premiums increased 8.7% faster than inflation, and non-renewal rates also increased. And on top of that, consumers in high-risk zip codes paid more and were non-renewed at a greater rate. There is a lot to unpack from this report,
which is why CR's own Lisa Gill is back on Talking Carts to share insights on how to navigate homeowners insurance and a proposed 9-point homeowners insurance bill of rights.
And the thing that really kills me is once you do clear that hurdle and become a homeowner, you have to have that insurance. There's no way around it.
No, yeah, you have to protect yourself. And so it's crazy that insurers are saying, actually, in certain states, we're just not going to cover you. It's just too much of a liability. And, I am not one of the people who think that insurance is a scam, but I do see why people think that, because truly you feel like, okay, well, you pay into something, and then when your time is up to need it, it's there for you. And some insurers are saying, actually, not quite the case.
Okay, don't accuse me of being in the tinfoil hat brigade, but I think I may be on the other side of that equation.
I get the hesitation.
Sure.
To think that you could lose your home and just have no recourse whatsoever is frightening.
Speaking of, recently I had the opportunity to actually take a trip out to Altadena in California, the site of wildfires, the Eaton fires that happened at the beginning of January of 2025. A year later, we are with one family that lost their home. Alfonso Brown shared his story, and they've had some significant hurdles in the form of insurance challenges. We're going to go right now to the video that we made about one family's road to recovery after the Eaton fire.
The night of the fire, I was going outside periodically, checking everything and, putting a little water on the 1-2 amber that's coming in the yard. Yeah, but after about a little after 4, then the amber start coming in like fireworks on the 4th of July. So I say, this is too much now. I gotta go. So we just say, honey, I think we gotta go.
Alfonso Brown and his family were among the more than 100,000 who evacuated their homes. By the time it was contained, some 24 days later, the Eaton fire had burned over 14,000 acres and destroyed 9,414 structures.
There was a 3-unit behind there that's destroyed. But then you see everything else come down here, going up to here. 2 saved, and everything else burned.
Everything, including the 1912-built craftsman-style house that he and his wife Celestine bought in the mid-1990s for $150,000. So all the pictures of the house now are just anything that was on your phone, because everything else...
Not even on my phone, because, I wasn't a big, person of taking pictures.
You weren't a big picture guy. Do you wish you would have took more pictures now?
Trust me, I cry every day.
Yeah.
I cry every day about it. Right?
Yeah.
We just move on.
The family is committed to remaining and rebuilding, and they're doing it without an insurance payoff.
My insurance was canceled a month before the fire, right? I was with my insurance since about 2003, And then they just dropped me like the letter that I have there. It said, as of December 10th, right, your policy will not be renewed. And this letter was dated September 13th. So their mind was made up.
Liberty Mutual Insurance stated the condition of the property is the reason for non-renewal, calling out debris, missing roof tiles, pooling, and tree branch overhang. So wait, it's this tree's fault that after 20 years, your insurer dropped you.
This tree, the cars I had back there,
yeah,
that tree over there, and the garage, I had a carport right there, and a piece of the corner was missing. Mm-hmm. That's the reason why they dropped me. I cannot be pissed because it's already happened, you know. And I can't do that. I already lost the house. Yeah. Game piss is not going to bring it back.
A 2025 nationally representative survey by insurance shopping website Value Penguin found 1 in 4 homeowners had their policies canceled in the previous 12 months. A 2024 Consumer Reports nationally representative survey found 83% of homeowners who had managed to maintain the same insurance policy for at least 5 years saw rate increases. 1 in 10 saw premiums rise by 50% or more. The Eaton Fire has racked up $17 billion in insured losses, exacerbating what some are calling a homeowner's insurance crisis. A crisis that could threaten a bastion of black home ownership.
What's going on, beautiful black people? The Eaton Canyon Fire didn't only just burn land, but it's disrupted lives. It exposed how fragile recovery can be for black families, how quickly displacement happens, and how long neglect has gone undressed, and how easily those without resources get left behind.
The State of Black Dena, a gathering of Altadena and Pasadena's black residents, looked forward to the community's future and back to its roots.
And Dena was one of the few places in the San Gabriel Valley where black folks could legally buy property, were safe, knew their neighbors, and places that welcomed them.
As a result of that history, in 2023, the black home ownership rate in Altadena was 81%. Nearly double the national average of 45%.
You know, when you have something, you take it for granted until it's gone. So that's why I never take pictures. I never, hey, the mountain is there. I get up every day. So I took it for granted. Now that we lose it, then I see now, man, it was really something. To bring it back as was, as close to as was, is I'm getting for just structure 1.08. Okay, that's the lowest.
The lowest.
I'm getting some of them 1.4, 1.8, 1.6. A lot of people is selling and going elsewhere to start over. I'm coming back. A lot of people say, Glenn, it's too hard for me to come back here. It's too much. I gotta come. I gotta come back.
So an extraordinary situation and a really extraordinary guy out there doing the best he can with what he has. But hope is there. And there's also a way, if you feel moved at all, to help the Brown family. They have a GoFundMe page that is still open. Every dollar is one step closer to them getting back into their home. The folks of Altadena still need a lot of help on that road to recovery. We are going to move forward now. We've invited back what is officially now a friend to the show. You've been here more than once now, Lisa. So Consumer Reports investigative reporter Lisa Gill is here. Thanks for joining us again.
Thanks so much for covering this topic. This is so important.
Let's get into it now. What is the current state of homeowners insurance?
We call it a crisis. We are not in normal times. It's a tough world out there. That's the first thing that we learned, both through our nationally representative survey and from hundreds and hundreds of stories. I believe it's over 700 stories that we collected from consumers all around the country telling us of their insurance woes. Everything from premiums that had doubled or tripled, so way more than the national average, which is about 24%, or people who were dropped altogether, so they were left scrambling to find coverage, or they were asked to make significant repairs or changes in order just to keep the insurance. And so you'll find that there's very little loyalty among these companies toward you. The increases are double digit for most folks, year over year over year. We are not in normal times, and we may never return to that.
And Lisa, can you kind of explain what insurance companies are saying, like why they're just dropping people full out, California, Florida, they're just saying we're not going to cover you. Why is that? And why is that even illegal?
Right. So to start off, it's really good to understand that home insurance is regulated by each state. So, what's true in one state is not always true in another state. California and Florida and a few other states have experienced some pretty intense natural disasters, be it wildfires or flooding, hurricanes, uncontrollable events that are catastrophic. They call them, in some cases, named storms, and the number of named storms has quadrupled. That's one of the first reasons that insurers, if they were sitting here with us, would talk to us about the fact that natural disasters that cost $1 billion or more in damage have skyrocketed in the last 20 years.
I know I was looking at one of the earlier reports on insurance, and the folks at NOAA had said that in just the 4 years between 2018 and 2022, there were $84 billion disasters. So not $84 billion in disasters, but $84 billion disasters. And altogether, those added up to more than $609 billion in cost. So is that why my insurance premiums are going through the roof?
Yes. To put a finer point on it, what it means is that companies, in order to pay out those damages, often rely on something called reinsurance. It's like an industry lingo. It's basically their own insurance company. Like they get insurance for themselves. And that insurance is a global network. And that insurance has gone up 40, 50%, and sometimes higher each year. And so what it also means is that worldwide disasters, not just those in the United States, create this, I hate using the word perfect storm or the phrase, but they create an environment where insurance companies paying more for their own insurance, and they're going to pass those costs on to you.
To hear that the insurers have insurers and their rates are going up, and when a butterfly flutters its wings in Sumatra, my rates go up in Brook. Wow, it's
the very unfortunate reality that we now face. So we have disasters, natural disasters. We have more expensive insurance for the insurance companies. The other thing is there's an increase in labor cost, like inflation with labor costs and building material costs. What would have been maybe a lot less expensive to rebuild a couple years ago now suddenly has shot up in value. And so it's costing a lot more money to replace homes. And what's confusing, I think, to most people is that if you live maybe in an area where there are no hurricanes, there is no risk of a wildfire, it's hard for people to understand, how is it I am paying for wildfire disasters, and they're in, California or even other parts of the world. But that's the reality of, spreading risk is what insurance is. And overall, the risk for everybody has increased. And it's really unfortunately reflected, I would say, in the sticker shock, pocketbook, every time, you get that premium every year, or you just get dropped altogether.
Absolutely. And, from my perspective, of course, I knew, all right, well, a lot of these insurance companies, they're nationwide. So things that are happening, to your point, it might be happening out in California, but it's still affecting your rate in Jersey and New York. It's really more of an international view. It's like whatever is happening around.
If there is a tsunami in some far off place you have never found on a map,
Right.
or a fire like we experienced in Altadena, all of those things are still contributing to why your prices are being raised on your ranch house somewhere else where you think there's no natural disaster, extreme weather events happening.
Correct. And it's important, I should mention too, a lot of the companies are, national coverage, but they face as a company the global pressure that you just described, and the pressures across state lines. And it's very understandable, when you get that policy increase or being dropped and you're just like, what? I've paid my premiums on time. I've been with this company 30 years. We've done all the things that we can to essentially harden our home. Maybe you have a metal roof, or you've taken all these steps. You've got a good credit score. You've done all the right things, and still you're facing double-digit increases, or you're on the hook trying to find a whole new insurance company.
Now, Lisa, you mentioned you've heard from 700 homeowners, and so you have a very good idea of what the gripes are. For the people who are being dropped, how long does it take for them to find another insurance policy for them to cover their home?
And can I put even like another spin on this? If you do get that letter that says we're non-renewing, do you have any recourse? Or like the moment I get that letter in the mail, do I have to start calling up other people? Or is there a way for me to fight back and stay insured with the people I've been paying for the last 5 years?
It's yes to all of those. And I will say this too. One real troubling issue, and it's totally understandable, is that there are a lot of people that we heard from who said, I received a letter in the mail. It was very thin. I assumed it was my renewal because I've been in that company for so many years, and I didn't open it.
Didn't look.
Maybe they went on vacation or life got really busy. Mail piles up. I do not like opening mail. And then when they went to go open it, they were left with either a very short period of time or it had already expired. It sounds so basic, but the first step is to open your mail. You do not expect to get a phone call or a text message or an email, unless maybe you have a broker that you work with, where the broker might contact you and say, hey, it's time to renew. And I also heard that you're not going to be renewed next year. But if you don't have that and you're kind of DIYing it, be sure to open the mail. The second thing is, to that great question, how much time do you have? Every state is different, and some states do not have a limit at all on how much time that company can give you. And we heard from folks who had 2 weeks, 3 weeks. I have heard some folks that were told that they, months ahead of time. We at Consumer Reports, for our Consumer Reports bill, homeowners Bill of Rights, are asking states to provide the minimum, and companies to provide a minimum 60-day window before that policy expires. That should give you enough time to find an independent broker or go online and start comparing all the policy options available, and give you time where if your traditional policy options are not available, that you can look for alternatives, and which a lot of folks have to do. So 60 days is kind of the magic number. There are some states that require 90 days. I think California is a 90-day state. But again, then there's some states that have nothing. It's like literally 0 days. They'll give you about 2 weeks. But, what's really hard, though, is like you have the shock, and then you need to do both things. I suggest attempting to appeal. There's no formal appeal process, but it involves you either calling directly to the company or asking your agent on your behalf to get in touch with them and see if are there any reasons why you were dropped. And it could be the case that they used satellite imagery or Google Maps or Google Earth rather to take a bird's eye view of your property, and they might think that you've got, and we heard plenty of people where this happened. It looked like mold on the rooftop, but it turns out it's not mold, it's shadows from a tree or something to that effect. And the roof is in much better condition than what essentially, these photos are showing. And a lot of times, unfortunately, these decisions are made, they're automated, and a human has not necessarily reviewed the images and have not necessarily sent out the letters. So by having your human, intervention, whether you're calling or getting the broker to at least put it on, put the brakes on. That's, I would say that's your very first step. Just try to find as much information as possible as to why you were dropped.
So to be clear, in this AI age that we're living in, a satellite image of your roof where there's a shadow, a leaf fell, any number of things could have happened. A bird could have been flying by and cast a shadow and you were there. So this image can trigger some kind of program to think that your roof is in such a state of disrepair that it will automatically generate a letter saying, oh, we're not going to carry you anymore. And it's sent out and there's no human intervention anywhere along this chain.
Correct.
And you could be at risk of losing your homeowner's insurance because of that.
That is 100% correct. Yep, that is exactly correct. And so we heard from consumers when they called or their agent called to get more information and actually ask for the images to be shown to you to try to ascertain like why or what the situation is. They were able to get a hold of roofers or professional, inspectors to come and take a look at the roof, do roof reports or, generate some sort of like report and then provide that to the insurance company to assure them that your roof is actually in great condition and that those were shadows that AI identified. And so that is a very common situation. So I would say, I guess really the first step is when you get that non-renewal, don't accept it right away. Immediately get on the phone, try to understand why, and also be sure to get any information, any imagery that you can so that you can get some help in trying to essentially fight it. But, while you're doing all that, you should be now looking for another policy with another company because you have no way of knowing how this is going to play out. So you're doing two things at once, essentially.
Yeah, Lisa, you mentioned a broker. In our research of this, have we identified that sometimes we get better results by using one, or is it just what you have time for? Maybe use a broker if you don't necessarily have the time to do the research, but if you do, you can go this on your own.
Yeah. So there's a couple of things, it sounds super old fashioned, maybe a little vintage, old school to say, hey, go find a human. And really what you're looking for is an independent broker. And the reason is because you want that broker to be able to look at every single option of every company available in your zip code. If you use a regular broker who only has relationships with a couple of companies, you're only going to get quotes from those couple of companies. And that is the case with a lot of online, like I would call them like indexers or aggregators. You put in your information, you might only see a couple of companies. And that I find that to be a problem. You also might not realize that they are only looking in 4 or 5 places and not all other options. So with a human who is identified as an independent broker, they will provide every single option for you to sift through and make sure you get the right policy. And the second most important thing is that, and they're like equally important, is to make sure that you get the actual correct coverage. So one of the things that we found in our nationally represented survey is that a lot of folks, it's like, I want to say it's almost 20%, get to the point where they have to file a claim and then they learn they are not covered well enough. Somebody has made an error along the way and they realize, I have damage to my home. I need to pay in order to get it fixed, but my insurance is not covering it. And they thought that the insurance would cover it. You can avoid that by really working with a professional who writes policies day in and day out and who can guide you through all, policies are complicated. It is not simple. And I would say it's not as simple as even auto insurance. There are maybe up to 10 different variables. And of course, what will happen when you go online is you will get your state's minimum requirements. But I want to give you an example to that. In the state of Indiana, where I'm from, the minimum requirement is 80% of the total replacement cost. So, and that sounds pretty good. Okay. You're like, it seems moderately reasonable. Or I could get the actual cash value. Okay. That sounds, maybe I want that instead. I don't know. But the main thing is that at 80%, it's not 100% or even 90%. And so if it were to come to pass that the home needed to be totally, it's just like wiped out by a fire, you need to rebuild, they're only going to pay for 80% and probably up to a certain cap. And you're going to be on the hook for that 20%. But it's hard, the way that the industry lingo works and some of the, I would say, abbreviations and the declarations page, 1-page summary, it's pretty tough unless you're the kind of experience in doing this to like figure all this out. So getting an independent broker can help you totally understand the difference between all these different coverages, what's going to work with your specific home, or maybe you have a condo, or if you have a really old house, you're going to want a different kind of coverage altogether because it appreciates differently than maybe just a regular, more modern home. I would say if you're worried, your first step is that in-person independent.
Well, you laid that out, and that actually happens to dovetail with the first point in the 9-point homeowners insurance bill of rights. And the genius part about this article that you wrote, in my view, is that it lays out these 9 points, the first of which is a clear, plain language explanation of what is and is not covered by your policy. So it's like a presentation of the problem, how it should be fixed, and until it is fixed, this is what you can do to cover yourself. So I urge everyone to get over to cr.org and check out this Bill of Rights that gives you real world news you can use right now while we collectively use our power as consumers to move the industry to really be of service to us.
You know, in thinking about that, the top tip that comes out of that is to review your policy every year and not just automatically renew it. And it seems you probably think, oh, I know it's in that policy. I understand the basics of it, but insurance companies will change the terms on you potentially every year. Everything from raising a deductible or creating separate deductibles for different kinds of problems, like all different kinds of like permutations of your policy can occur, and you might just not realize it. So whether it's with your broker or you can educate yourself on what all the terms are, just sitting down and doing it every year is pretty critical. Only 2 out of 5 people do this every year. And in the old days, it's probably okay because those policies didn't change a lot. But in the new world that we live in with homeowners insurance, they are likely to change every single year. And it just becomes absolutely critical to do this so that you get enough coverage and you're not overpaying for basically lousy coverage.
The fact that the home insurance typically changes every year, it's almost like one of those things you might as well put on the calendar and make sure you're spending time to go through it, because the last thing you would want is for something to happen. You think you have coverage and here we go.
To disastrous results, as we've seen from so many examples all across the country right now. So
right. I have one more tip that is really important that some people may not realize.
Tip us out.
The top companies that did very, very well, the top 3 best rated companies in the Consumer Reports survey that we performed, one of them is USAA, and that is coverage for military and military families. And I didn't realize how broad that is. And it can mean that if you have immediate family members, but maybe even you've been divorced with a spouse that's in the military, or you are the child of a military member, even somebody who is retired or a former veteran, you still qualify for USAA insurance. And I was also interested to learn, working with a broker, they will not be able to write a USAA policy. You have to call them directly. So USAA is across the country, but it's worth calling them if you have a military member in your family that you are directly related to and you're interested in their coverage. They rate very highly across the board. And I would say, you might not know what their rates are unless you get a hold of them.
So that no good X might be good for something in the end. Cash in on that insurance. You earned it.
That's right. That's exactly right.
Woof. Well, thank you for the news you can use. Thanks for rocking with us at Talking Carts.
Thanks so much for having me, y'all.
So that was Lisa Gill, investigative reporter at Consumer Reports. I mean, Ryan, she is always a wealth of knowledge, but especially on the topic of insurance.
Homeowners Bill of Rights seems like something that's right for the times. I'm going to issue the challenge to our listeners, subscribers, likers. Let us know what industry segment of the market or just consumer issue makes you feel like there should be a Bill of Rights surrounding it. We'd love to hear some of your answers. We'd love to just hear from you, period, as we move forward with Talking Carts.
Make sure you check out Lisa's full report on cr.org, and we'll see you next time on Talking Carts.
Bye now.